It's Buy the Rumor, Sell the News, FOMC edition, Jermal. Are you ready here? We've been talking. There's been a lot of talk about, the FOMC is going to do this. The rumor mill has been spinning for months, and now the event is here. And guess what, my friend? It's almost 100% priced in. So there's nothing to trade, right?
Well, apparently it seems that way, but probably not.
Exactly right. This is a classic. This honestly is one of my most favorite events. I came up trading interest rates. I've traded a ton of these FOMC events directly in treasuries, the cash markets, the futures markets, the euro dollar futures markets, a bunch of different crazy stuff. I've seen a ton of these events. And a lot of people, Jermal, their first take is always like, oh, so if they hike, then interest rate markets, they go ripping higher. And if they cut, then interest rate markets, they go, shooting lower here. But the rumors get going and the stuff gets priced into the event. What people should look for, what is the actual action, is what the projections are for the next one. Because you can see here, this is all the upside that we've seen going into our first rate hike. This is the 2-year yield product. It's a great product that's highly correlated to what the Fed moves around, which is the Fed funds rate. And you can see all the action has kind of already been done in terms of, yes, they're going to rate hike. Yields have moved higher. We've seen all of this. The rumor phase has already kicked in. You could have bought the rumors back in the fall or winter of 2021, Jermal, but now, do we sell the news on the other end of it? We've seen these projections move up to, some of these futures markets are predicting that they hike 150, 200 basis points this year alone. They're supposed to hike for the first time tomorrow, which is mid-March. Are we selling the news on this event week?
You can definitely make a case for it. I think it seems like so, because I think it's great that you highlighted the box. Where the box starts, that's how long we've been talking about a rate hike, for like 6 months. And you could argue that I think, things started to get out of, I don't want to say out of control, but really started to amp up right where the right side of the box ends, right there around January. And we really saw the liftoff. So I think you can. It's, we keep hearing, like you said, 5 hikes, 6 hikes, 7 hikes. Then the Ukraine thing comes back in. They start walking it back. Oh, maybe 5 hikes, maybe 4 hikes. Nobody knows. So that being the case, you can definitely sell a little bit of the news here, I would think.
Exactly right. We'll end with the most practical piece here on whether or not you sell, or, there's a case to continue to buy this market here, but it is, I think an apt analogy is like a public stock, a public company is getting bought out, right? And you see that price action before the news hits the wires. Why is this stock moving higher? It's moving higher. What the hell goes on here? And then the news hits the wires, and it really rips. Then that stock is it's like, oh, they're buying it out at $100 a share. And yesterday it was trading at 60. Before the news comes out, it moves from 60 to 65 to 70, and then it rips up to 100. But then a lot of people, when you're transferring that over here to interest rates, what's happening tomorrow is essentially like, that's the day that the deal goes through, right? And so it's like, ooh, now that the deal goes through, like, what's the price of that stock going to do the day that the deal goes through? And it's like, probably nothing, probably nothing, because it's already been priced in. But where that analogy breaks is the next trade is, what is the Fed going to do next? We've got this market that's very efficiently priced, like you say, at least 4 or 5 hikes this year, getting close to about 200 basis points worth of hikes. They're maybe hiking 25 to 50 basis points tomorrow. They only have a handful of events left in the next year or so. If you think that they will get up to 200 basis points and beyond, then yeah, you could buy this market. But I think there could be a case to selling it, given that the Fed doesn't usually act that quickly. And it might be a case, Jermal, where there's a run up into this event like we've seen this week. And once the event actually happens, that's all the juice that it had. And we see not necessarily a big sell-off that the Fed is not going to hike as much, but just that the market might come back to a little bit of reality in the 17 range, the 16 range in S2Y.
Yeah, I mean, I gotta say, man, I'm forever grateful to you and Pete, because this is something that I wasn't looking at before, looking at these yields, and it's fascinating because, again, we're making markets on something that's 2 years out, right? Like, obviously, we're thinking about tomorrow's rate hike, but like you said, the next thing is to pay attention what's going to happen going forward, and how many hikes or how big of a hike do they do. From what I understand, they rarely do anything more than a quarter point hike, so that's the other thing to keep in mind. But again, I mean, we're looking at things a couple of years out, and it's just fascinating.
That's exactly right. To wrap up here, they have not increased the Fed funds rate by more than a quarter point since the year 2000. Going back to before then, it's been only 25 basis point hikes, which they can do 50 basis points tomorrow. And if you see 50, you might see these yield markets rise a little bit. If they do 25 and they talk a slower pace, I think you're going to really see a lot of the luster being taken out of these yield markets. But you're absolutely right, Jermal. And that's where we'll finish this.
Wait, real quick. Do you think they do 50 tomorrow? Do you think they do 50 tomorrow? I don't think they do 50. I don't think there's any chance, especially everything we got going on right now.
I don't think they do 50. And that's kind of part of my case for the short here. But you're exactly a good point to end on is futures and options as well. The derivatives markets, the play is always what's going to happen next. I hope I don't offend anyone by saying this, but the sucker play is, what's happening right now? Like, they're going to hike tomorrow. There's no money to be made in them hiking tomorrow. I'm sorry to say. What's going to happen next? That's where your futures trades come in. And that's why I think there is an opportunity you could have bought the rumor, months ago that the Fed is going to turn around and start hiking. And now it's news time, and you better be playing what's going to happen next in these interest rate markets.